When you think of traditional value stocks, names like Beyond Meat don't typically come up. How did it end up being the best performing value stock?
Yeah, exactly. This has growth all over. It's up something 50% this year. So it has a quirk with how it works in the indexing. So Beyond Meat is a pretty new company. It doesn't have a lot of data. So what happens, it made it into the Russell 1000. Now, when it looks to be included in the value index, what they do is, if we don't have enough data for this company, we look at its competitors. So Beyond Meat happens to be in food packaging. So who are some of the competitors there? Campbell's Soup, Tyson. These tend to be value stocks. So what happens is, by looking at its competitors and using those metrics from Beyond Meat, it ended up making its way into the value index. A similar occurrence happened with also Uber, too. Uber actually falls under trucking. So all these companies end up coming in the value indexes too, and that's why Uber actually makes it into the value index as well.
Value continues to struggle, and weirdly, it's really been struggling since the beginning of this year. Growth continues to be something that people are focused on, despite the fact that we are seeing this kind of message coming from the equity markets that actually the world is going to reflate this year. Have allocations to some of the sort of high-flying names aided values when it comes to this space?
Yeah, so you would think that an allocation to something like Beyond Meat would help, but it's more, it just looks like this optically that it's in the value index. The reality is the weight in this product it's still a really small company, so the weight in the value index is really small, so it hasn't really driven a lot of the performance. But just this year, like you mentioned, value has been awful. Again, any gains it had in the last quarter of last year, it's completely given it up. Even flows in our following. You actually had people starting to buy into value at the end of last year. Now they're completely exiting it. Value is just having a really tough time. A lot of it's also led by financials. A lot of these value ETFs have very heavy financial allocations. That's what's been dragging it down.
So it brings up an interesting issue about the power of the provider. What do you imagine is the power, should be the power of the provider here?
Yeah, I think the thing is the providers have so much influence, right, over what goes into these ETFs. The ETFs are just tracking the index. So something like S&P, for example, of all equity ETFs, 40% of the market is run by S&P. So when you see this situation like Beyond Meat, when a stock has a little quirk in the index and it gets into it, it can actually have a really impact in flows, right? So it's just showing that there's a lot of concentration not only in the ETF industry, but also with the index providers in these decisions that they're making.